Inflation in the United States increased by 2.6% in October, aligning with economists' expectations and marking a steadying trend after months of fluctuating price levels driven by volatile energy costs, persistent supply chain disruptions, and evolving consumer demand. The latest data from the Bureau of Labor Statistics reveals that the Consumer Price Index, CPI, a key measure of inflation, reflects a year-over rise largely attributed to climbing food prices, moderate wage growth, and higher costs in shelter and services. Core inflation, which excludes volatile food and energy prices, remains steady at 2.2%, indicating a gradual cooling in broader price pressures that may provide some relief to households and policymakers alike. Despite this, energy prices saw a seasonal uptick, with gasoline and heating oil costs rebounding as colder weather set in, while grocery prices rose at a slower pace compared to earlier months but still exceeded historical averages, keeping household budgets under strain. The Federal Reserve, which has been closely monitoring inflation metrics to guide its monetary policy decisions, is likely to view this data as evidence that its aggressive interest rate hikes over the past 2 years are beginning to yield results, though officials caution that the path to sustained price stability remains uncertain. Economists note that while the October inflation figures align with forecasts, they also highlight underlying challenges, such as wage pressures in a tight labor market and geopolitical tensions that continue to affect global commodity prices. For consumers, the effects of inflation remain tangible, with housing costs accounting for a significant portion of the increase, as rents and home prices stay elevated despite higher mortgage rates that have cooled some buying activity. Meanwhile, medical care services experienced only a marginal increase, suggesting that healthcare inflation may be stabilizing, offering a small reprieve for households navigating rising living costs. Retailers have also felt the impact of inflationary pressures, as consumers shift toward value-driven purchases, prioritizing essential items and seeking discounts ahead of the holiday season. While supply chain improvements have mitigated some of the cost increases seen during the pandemic, businesses continue to grapple with higher input costs, passing a portion of these on to consumers in the form of price hikes. Analysts expect inflation to continue its gradual deceleration in the coming months, barring unexpected shocks such as abrupt energy price spikes or significant policy shifts. Financial markets responded positively to the October inflation data, with stock indexes rising slightly as investors interpreted the report as a sign of economic stabilization and a potential pause in the Federal Reserve's rate hikes. However, bond markets showed mixed reactions, reflecting uncertainty over the Fed's future actions and broader economic outlook. For policymakers, the 2.6% inflation rate represents progress toward the central bank's long-term target of 2%. But they remain cautious, emphasizing the importance of maintaining restrictive monetary policies to prevent a resurgence of inflationary pressures. As the holiday season approaches, consumer spending patterns will be closely watched for signs of resilience or further belt-tightening, providing additional insight into the state of the economy. That while progress is being made in containing price increases, the journey toward full economic normalization remains complex and fraught with challenges that demand careful navigation by policymakers, businesses, and consumers alike.